What is going on, everyone? Hope y'all are doing well, and in this video I'm going to share what I'm going to be looking for during the Honest Company's upcoming earnings report and conference call. I've talked about this company a few times on my channel, and just like a few other companies recently, I wanted to share what I'm going to be looking for, both the caution flags and the improvements that I want to see. But I don't want to waste your time, so let's go ahead and dive right in. So for those of you that don't know, the Honest Company creates effective and safe lifestyle products for families. This is from diapers and wipes, personal care, and supplements as well. The founder of the company, Jessica Alba, has had a major impact on this company from an influencer perspective, and this is what made me first want to look into this company. So Honest's main business right now is their diapers and wipes, but they have continued to diversify themselves not only in the kinds of products that they offer, but also in the stores as well. In June of last year, this company was almost $20 a share, and since that time, this stock has taken a major tumble, and it looked like there was no coming back. But a few weeks ago, it looked like they finally hit a bottom. But right now, this company has a market cap just under $350 million, and with revenues roughly around the same amount, this could be one of the best risk-reward plays in the entire stock market because of good gross margins, no debt, and plenty of cash and cash equivalents. One thing that I've been saying since the beginning of this year is that investors are wanting to look for companies that are going to be profitable or are already profitable that can withstand the pressures of a recession. Honest is a good example of a company with needs-based products, which is key during a recession. We know people are not going to stop buying diapers and wipes, and so companies that will be able to sell their products during the recession, in my opinion, are good companies to buy. So when you take into account that this company has products that people will buy year-round, no matter the economic time we are in, solid gross margins, cash to get them through the year, and the fact that they're soon going to be profitable, I see this as a tremendous opportunity to buy Honest. However, when it comes to their products, one of the main things that they have said that has hurt their revenues is the supply constraints on their wipes. Now, even though this isn't the primary part of their business, it is still a substantial amount. So I want to see improvements in the supply chain so that they aren't restrained to grow revenues. In their previous conference call, the management team said once they get past these headwinds of supply chain constraints, which could go into 2023, they are expecting double-digit long-term growth. So for a company who in 2023 could have accelerated growth and a possibility to be profitable, these next 2 years, I believe, will be great in terms of the Honest stock price, but it will be based off of how long we remain in a bear market. But let's look at the expectation for this upcoming earnings report and conference call. When it comes to the projected revenues, analysts have them losing 3% of their revenues year over year. However, the Honest team believes that they can grow mid-single digit for the next few quarters. I think they will have some positive growth and beat estimates, but I don't see this being a major quarter where we see 7 to 8% growth. I'm expecting somewhere between 3 to 5%, especially because their partnerships that I will talk more about later aren't really going to start affecting this company until really Q4 of this year going into 2023. When it comes to EPS, analysts are expecting the company to lose 8 cents a share, and I think this is pretty accurate. I don't really care much about the EPS numbers right now as long as they are continuing to project profitability in the near future. And this is why I believe the most important metric to pay attention to is Honest maintaining the guidance of having positive EBITDA for the second half of the year. EBITDA stands for earnings before interest, taxes, depreciation, and amortization, and is a good way of evaluating a company's path to profitability. If they are able to maintain this guidance, then I do believe that profitability is right around the corner in 2023. But before we move into the next thing, I think we can all agree that the stock market has been extremely volatile. And from what we saw in 2021, I do not want to put all my money into one brokerage. I've tried several different platforms, but one I really like using is Moomoo. They're doing a promotion right now where you can get up to 7 free stocks when you deposit $100 to the platform, or 10 free stocks when you deposit $2,000 to the platform. Think about it. That's literally free money for you. As someone who has used multiple platforms, the Moomoo app is a really clean and easy app to use. You can buy stocks both on the US stock market and the Hong Kong market as well. Plus, there are no fees for trading US stocks if you're a US resident, and if you enjoy technical analysis, they have level 2 data as well. So if you are interested in using Moomoo, click the link down below in the description to get started. This promotion only lasts until the end of August, so make sure you sign up before it ends. The next thing that I want to see from this company is that they maintain their 2022 outlook for revenues. Now, the company is projected to be flat in terms of their revenue, and honestly, I wouldn't doubt seeing them grow maybe 1 to 2%. Now, Procter & Gamble reported numbers on July 29th, and they said that they are expecting inline numbers or an increase of about 2%. So I believe we could see something similar with Honest. But remember that even if their revenues are flat, it is because of their first quarter revenue reductions and not the quarters after that. Another thing that I want to hear an update on are the different partnerships that they started. They partner with Walmart for their diapers and wipes, Ulta for their personal care, and GNC for their new supplements. Now, I don't think we will get significant news about this as they just started to enter stores, but I'm interested to see and hear how fast of a ramp up they will have in these stores. On July 19th, they said that they are launching into Walmart to expand distribution. Now, note that this is for Walmart.com, and they will be moving into stores in Q4. And then on August 2nd, they announced that they are expanding distribution into the stores of Ulta Beauty. Now, there isn't much news on the GNC partnership, but as of now, I don't see this as a major partnership in comparison to the other two. Now, another partnership that I want to get an update on is their partnership with Superordinary. This is important when it comes to their global expansion and brand awareness in Asia, particularly China, which is currently the largest country in the world in terms of population. I do believe that we won't start to see the effects of this until at least 2023. But once supply chain issues begin to dissolve and the people of China go back to where they were prior to the pandemic, then we will start to see that double-digit growth that I mentioned earlier. The Honest Company is the kind of brand that many people from this generation and the generations to come are going to be looking for. And with about 5% household penetration, there is plenty of room for this company to run. Now, Honest has various products from diapers and wipes to skin and personal care to household and wellness. But when I look at this company, I see tremendous potential to gain market share because of their generational focus. But also, when you think about the Honest Company in comparison to their biggest competitors, you will think of Honest as a cleaner, healthier company. And people over time will be willing to pay a little bit more for healthier products. So when it comes to the Honest Company, here's what I see. I see a brand that will continue to be trending for probably the next 5 to 10 years, and a company that is just starting to get into the rest of the big stores. This stock, in my opinion, is going to get me some great gains, and I feel pretty confident with making a good sized position in this one. I will continue to add shares when this company remains under $5, and if it goes past that in a short amount of time, then I'm perfectly fine with it because I have other opportunities as well. I believe that overall, as a business, they are in a much safer position than they were a quarter ago, with much greater growth potential ahead of them going into the second half of 2022. I see this one as a tremendous buy unless we see significantly poor numbers, which I do not expect, especially given what the competitors have done. Now, in terms of my portfolio, I can see this one maybe reaching a top 3 position, especially if they continue to stay under $5. But I hope you all enjoyed this video, and if you did, hit that like button down below. It really means a lot for me and this channel. Also, I would love to hear your thoughts on the Honest Company, so feel free to mention them in the comments down below. And if you're new here, hit that subscribe button and notification bell, that way you're notified when new content comes out. Hope you all enjoy the rest of your week, and I'll see you in the next one.